Ben Miller is the co-founder and CEO of Fundrise, one of the first platforms to bring large-scale commercial real estate investing to everyday people. It currently has about $3.5 billion in assets under management and is invested in about $7 billion worth of commercial real estate. Ben, welcome to the Property Play. Thrilled to have you here.
Yeah, thanks for having me.
It's been a long time. We met, I think, 13 years ago. For those who don't know you, though, you have always had this driving force of the democratization of investing. Not just real estate, but tech and all other things. You know, anybody can buy a stock, anybody can buy a bond, but it's a lot harder to get into commercial real estate investing or into tech funds or companies or startups, all of that. But that's what you want to do. Now, it's interesting to me because you come from a wealthy family. Your father was a big real estate developer here in the DC area, and yet you still want to bring investing to the common person. Why is that?
My dream is to get wealthy by tearing down the incumbents. And so technology is the best way to disrupt the status quo. And so we've been leveraging technology year after year to do new things that hopefully change the way things are done.
Okay, so you started in commercial real estate investing. You then moved to a tech fund, and now you're going to get into AI. I will get to that in a minute, but of course I have to build the suspense here, right? But I want to go back to where you and I first met. You were crowdfunding. We don't really use that term anymore. I don't know if it still happens. It does still happen, but this was big back. You started in 2012. We met in 2013 when you were crowdfunding this very cool restaurant space in a sort of up-and-coming hipster neighborhood here in DC, and it still exists. But tell me what you learned from that experience and why you moved from crowdfunding into more traditional types of funds.
Yeah, I mean, for me, the formative moment was the great financial crisis in 2008, where I came away from watching the financial industry almost collapse with a lot of skepticism and wanting to build an alternative where people could own real things and they would feel like there's more fairness in the system. And so that was back in 2010. And there was no such thing as crowdfunding. We were the first to invent this idea of raising money on the internet for real estate. We went to the SEC. It took us a long time to get through the regulations, and we did it, and we were the first, and we did it from about 2012 to about 2015, where we were pioneering what became known as real estate crowdfunding.
And you could invest as little as $10 into a restaurant, right?
Well, into a building, yeah.
Right.
Yeah, it was a $100 minimum back then, and we created this new industry. I mean, by 2015, there were 150 copycats, and they'd raised billions of venture capital. And it was funny, right when it became very popular among tech, we pivoted away from it.
Why?
Because having been through crises in real estate, I felt like raising money for a single real estate deal is too risky. And so we moved to a fund model, and we started raising money for funds like BREIT, kind of similar to BREIT before BREIT existed. I always wanted to be the Blackstone of the internet. And so we created a new structure. We went to the SEC again and democratize investing into private equity. So
and how low was the entrance to that? Still $100 or?
Yeah, we moved to $10
right.
a few years later. So it's a $10 minimum.
I knew there was $10 somewhere.
Yes, we moved to $10 minimum eventually. It was once you have a digital backbone where everybody's signing in with their apps, an iOS app or an Android app, it doesn't really matter what the minimum is because it's all bits. It's all digital. So there's zero marginal cost.
So what do you think you then kind of proved to the real estate world and to Wall Street about this new method of investing, whether it was crowdfunding or into a fund where you were allowed to invest as little as $10?
Yeah, it's interesting because when we first came up with this idea back in 2011-12, people were just shocked. They thought it was a terrible idea. By 2018-19, all the major institutions have started to do it too. Retail became the hottest growth area for institutional investing or institutional asset managers. And there's BREIT and SREIT.
But they have higher minimums, don't they?
They have higher minimums, but fundamentally it's access to the retail investor. They go through an intermediary, through a wealth channel. But the idea of opening up alternatives to the masses became mainstreamed. And so on one hand, they're coming towards us, they've converged towards us. On the other hand, we institutionalized our model. Now we have $700 million loan from JP Morgan, a $400 million loan from Goldman Sachs. I mean, so we institutionalized while they retailized, and the industry is converging.
And then you still have real estate, of course, but you decided to then get into tech. And now you have a fund that invests in companies like OpenAI, Databricks, Anthropic, Service Titan. Why did you want to move into tech?
Well, I mean, we essentially succeeded in democratizing investing in real estate. And in 2020, we thought about, well, what's the next hill to climb?
And there were a lot of people climbing that hill, were there not?
Well, there was no such thing as a venture fund anybody could invest in. That was a new thing. We went to the SEC and we, once again, did something.
So you're getting to really know the SEC.
Yeah. Oh, man.
Now, right?
I definitely spend a lot of time working with them. And so, we went to them and said, why can't we do what we did for real estate, but for private tech companies? And we went and created essentially the first non-traded public venture fund. And then we went out and invested it. Like, we're lucky. We got into the best, I think the best companies in the world.
So how many investors do you have, individuals?
2 million.
2 million individual investors?
Yes.
I'm guessing that's a record.
I assume so.
Okay, all right, we'll look it up. All right, so now get to the drum roll part.
Okay.
Fundrise is about to launch something very new. It's called Real AI, and it is an AI real estate analyst that can evaluate a property, compare markets, model returns, even give insight on who actually lives in a building. How are you doing this?
I guess what happens is when you're a masochist, you always want to find the next thing to do. And so 2 or 3 years ago, we started working on building a real estate AI product. And the whole goal was, how do you replace a human worker with artificial intelligence? And we spent 3 years doing that, and it's happening in real estate. It's going to happen in every sector. And so the product we've built, which we're rolling out today, is our exclusive launch. It's called Real AI, realai.com, and it does the work of a real estate analyst.
And it's for anyone.
Anyone can log in. Anybody can use it. It's you're talking about bringing, I think, some of the most sophisticated analysis data to anybody everywhere.
And what exactly is this going to do for me? I mean, I sign on. It's going to analyze properties. It's going to help me invest if I have the money to invest or decide where I want to invest into one of your funds. But on a basic level, I assume there's some kind of charge for this. You got to be making money, right?
Well, it's free for the first dozen or so uses, and then we have a standard plan that's only like $50 a month, $60 a month, and it sort of goes up from there.
So like ChatGPT or something like
right,
that.
Right.
But then when you talk about what it can do for me like that, how is it any different from ChatGPT?
So I sometimes call it ChatGPT for real estate, but it's very different because it's something new. This is something, when we spent a lot of time building it, I hadn't seen anybody doing this. So typically with AI, you're using AI to reason, do research, do sort of thinking for you. But what we did is we went out and built a database of now 3.5 trillion data points of all the real estate knowledge you would want.
What is that knowledge?
So that's every property in America. We actually put in something really new, which every person in America, people data, which I want to talk about that. We have 10, 11 million units. We track them every day. So the goal is to create a huge amount of sort of background facts that you can then use as infrastructure for the AI that does the reasoning. So, for example, if you go in and ask ChatGPT, what rents should I charge at this apartment building, let's say 111 Main Street, it's not going to know because it doesn't track rents like we do. We track every rent in every unit in every building for apartments in the nation. And so Real AI can tell you, here's what every one of your competitors are charging, here's how long it takes to lease a unit, how long it's been vacant, what the leasing efficiency is, what the leasing velocity is. We've done all this modeling. So that's basically really new.
And so other companies like, say, JLL, which have large AI platforms built out that do some of the similar type of stuff, you have to be a client or you have to be an employee of that company in order to use it. You can't just be the common person.
Right. Anybody can go to realai.com. And I think that if I'm talking to real estate people, everybody needs to, because if you are not adopting AI today, you're going to be made obsolete. Your career's at risk, your company's at risk. This is the biggest change in my lifetime, probably the biggest change in anybody's lifetime. AI is There's a lot of questions about how big it's going to be. I think we need to move past that, and we got to get to, okay, it's big, what am I going to do about it?
And you're going to lose if you're not in it.
I mean, it's going to affect you whether you like it or not.
All right, let's bring this down to a street level, okay? Because I want to be able to show exactly what it does. So let's say I want to invest in a multifamily apartment building somewhere in the South. I want it to be in maybe an up-and-coming neighborhood. I don't want it to be super pricey. I don't have a ton of money, but I want to see good returns. I want medium risk. I'm asking Real AI, where do I invest? What building do I buy? What street?
Yeah, boy, you're really good at this prompting here. So the thing is, we have every property, every market, every person in America, and we can talk about the people data because it's really interesting. So you could ask Real AI, okay, I want alpha. I want to generate like.
Wait, what's alpha? I want
to have great returns. I want to generate returns that are above market.
And premium. I want to invest in the South.
And I want to invest in, you're saying the South, so you might start with asking, like, where's the fastest growing markets? So one of the things Real AI has that's new that nobody else has is we track every person in America, so we know who's moving and where they're moving to. So we'll say, okay, well, 150,000 people moved to this area. Their average age was 42 years old. The people leaving were 37 years old. Their average median income. You have real-time data about who's moving and where they're moving down to the city block. So you can really get smart of the where question based on all the movement of people in America.
So I'm putting in where is the fastest growing market in addition. So my prompt is I want to invest in the South. I want to invest in multifamily, medium risk,
right.
High return, fast growing market. What else do I put in my prompt?
Right, and then after that, once you figure out where, you figure out what. And so because we're tracking every property, every unit in America, you can say where are the units that are mispriced. If you have a building where you have a rent that's $2,000 a month and everybody living there making $200,000 a year, right? That rent's probably under market because you have all the people data, which is really, I think, for the first time.
What is the people data?
Yes, let's talk about that. So. If you're on Facebook, Instagram, Google, and you're talking to your husband in your case, and maybe you look at it and Instagram shows you an ad, and uncannily it's exactly what you're talking about.
Of course,
right?
Been there.
How did they know?
Been there, bought that.
Yeah. How do they know? So what's happening is the internet actually has a ton of data about people, cookies, your spending on your credit card, all sorts of stuff is actually available to the big hedge funds, to the big tech. It's never been available.
It's all legal.
It's all legal. They're all using it, but it's never been brought into real estate. So we brought in data about let's say what you're spending. Do you have an iPhone? Do you go on Reddit? Do you like to eat at a Greek restaurant? I mean, what's your FICO score? What's your income? What's your wealth? All that data.
So you can say who's living in this building, and it'll say the median income. It'll say how educated they are. It'll say something about their credit. I don't know.
Yeah, I mean, like an interesting fact is like you can look at a building. I have this theory that buildings that are majority women actually will end up being a better asset to own.
Well, of course.
Yeah, so you can look at gender. You can look at age.
I didn't need AI to tell me that.
Yeah, right. I mean, so you can actually now bring people data into the decision, because one of the big challenges for real estate the last few years is you'd buy a property and the tenants there'd be a lot of tenant fraud. This is the type of stuff that I've talked to some of the big asset managers, Blackstone, Angelo Gordon, TPG. Some of them have dedicated machine learning teams. Most people do not. Our team is at least as good, if not better than theirs, and it's available to every person in America.
So, great. Sounds fantastic.
Mm-hmm.
I'm going to be able to pick my building in 5 seconds. There's got to be mistakes, right? There's always mistakes in AI. How do you guard against mistakes? What makes me know that this is really true and good data? Mm-hmm. And finally, you talked about Facebook and some of the places where you get your people data. You get property records, obviously, from public records, but there's a lot more to it. Where do you get this data? Very basically, where do you get it, and how do I know it's good data?
Yeah, so you're asking two different questions. The first, people are used to AI making mistakes. And so what we've done is we've split the facts from the reasoning. AI, which is like, everybody's familiar with OpenAI, Anthropic, is really good at thinking about things. But when you want to have it go get facts, the same way when you think about something, you say, okay, when did this property sell and how much did it sell? You go on the internet, you find maybe on Zillow, you maybe go on CoreLogic, you find a table that's got the sales price and the date.
I can go to the census, I can get all that.
That is a fact, and that's basically a cell in a table in a database. That's how facts are gotten by people or AI, with real AI, and that's how we get facts. That's why it's facts, not theory. With AI, normally it's a probabilistic. It basically it looks at what's likely rather than what is. So we've combined the power of the reasoning of AI with like the sort of traditional database structure where you get facts, and that's how we do it. The second question is where we get our data. I mean, we get our data from everywhere. There's data brokers. You can get data from. I mean, obviously we model the census. There's so many places you can get data. It is such an interesting thing that real estate people. I went to one of the biggest data sellers. There's all these big companies that sell data, and they said to me, "It's funny. I sell my data every major hedge fund, and I've only had one real estate company ever buy data from me."
Wow.
And I was like, "Who's that?" Blackstone.
I was going to say it. Of course. All right, so let's say this works. Let's say this just is revolutionary in the marketplace for the individual regular investor out there. How does it change the marketplace? How does it change how the big institutional firms work? And how does it change what we see in the future of real estate investing?
Yeah, I think there's three big changes. First, I have had some beta customers, and they were telling me, one of the guys I work with, or friends with, is Chris Rising from Rising Realty, and he said he was going to hire a dozen real estate analysts, and now, because of real AI, he's probably going to hire half as many. So it's a huge saving, but it's also a big impact on the way the workforce works. That's one. So that's been happening. Two is that another one of my friends, Christina Linden, who was at BlackRock and also Angela Gordon, she's launched her own platform. She said, I used to be at these huge institutions. I had all this infrastructure. Real AI basically provides that for me at a thousandth of the cost. And then lastly, it drives. Simon Ziff is another one of our sort of beta customers, and Simon said the speed of due diligence, the deal-making speed, is now going to accelerate because of AI.
Interesting. I was watching an interview you did on CNBC last year, and you just happened to bring up, you were talking about AI, not on this specifically, kept that under wraps, but you brought up your 14-year-old son. Mm-hmm. You're in a real estate family. You learned from your father. Your son said to you, according to what you said in this interview, what should I go into that AI won't make, ridiculous, I guess, in the next coming years? What job can I do that AI won't take away? Does it, make you sad, I guess, in a basic level that maybe your son can't do what you did?
Well, I didn't do what my father did, for sure.
Well, but what you're doing now?
Yeah. I mean, so this is like if we talk about how AI is going to affect real estate investing. AI is not going to take away everybody's job. It's going to take away some people's jobs. So for some part of the population, it's going to be an accelerant. It's going to make you make more money. It's going to raise your salary. So if you're an AI native, you're an AI adopter, if you are using it and you're proficient and you're smart and you're staying on the edge, that's always going to be valuable to companies. And there's going to be tons of innovation coming. So I think of it as like a co-pilot, and then there'll be people who just get amplified by it, and then there's people who don't adopt it, are afraid of it, especially middle office, back office, accounting, customer service. They're going to see probably 80-90% of the jobs disappear. So there's going to be this very asymmetric impact. This is what technology has been doing so far in America the last 20 years. It makes the rich richer, and it has a negative impact on sort of the normal worker.
But you're still trying to democratize it.
I mean, this is going to happen. This is going to happen. I just want it to be available to everybody, not just the biggest institutions. I think that would be a bad outcome for society.
All of this AI goes into data centers, and I would be remiss if I didn't ask you, because you are invested through one of your funds into data centers, and there's this constant bubble talk. We're overbuilding. We're not financing them the right way. Something's going to explode, and markets are going to crash, all because of data centers. What's your take on that?
I think the question of if AI is a bubble is boring. Basically, it's the wrong question. Because what's happening is people are asking, will it or won't it? If I go back to the internet, back in the 90s and early 2000s, if you look back on it, right, as a real estate investor, that wasn't the question that mattered. The question was, what's its impact going to be on real estate? And what did it do, right? The internet destroyed retail, right? Absolutely destroyed probably $1 trillion of value and created the industrial industry. We saw the exact same thing happen, work from home. It destroyed office, and it was a huge growth center for residential. So I think that AI, we should accept that it's going to be a massive change to society. It's going to drive growth in data centers. And it's really, at that point, you're down to tactically, how do you make sure investing in the right data centers? Data center growth is just going to be off the charts, probably going to last 10 years, maybe 20 years. I think the overbuilding is because people haven't yet seen the experience of actually how much AI is changing workforces and companies. And that's, as a result, they're skeptical. But if you're actually on the leading edge, you know it's actually a fact, and you move beyond the question to like, so what do I do about it?
And how does AI actually inform investing in data centers?
Yeah, I mean, so much of investing is about information asymmetry. The person with,
what does that mean?
The person with more information wins. And so what AI is allowing you to do is become a data scientist without knowing how to program or have an advanced degree in machine learning. And so we basically give you the tools, the data, to not only access like incredible new sets of data, but you can also upload your data, and your data is your data, and create new combined insights. And so if you have like spreadsheets or market reports and you're trying to figure them out and you want to upload them to your sort of private suite in Real AI, you can do that. And so what's happening is, and this is what's been happening for the last 30, 40 years, technology basically amplifies our intellectual abilities. It drives us to make more progress. That's an opportunity, it's not a threat.
So given that commercial real estate has always been very slow to innovate, we know, but it's actually been pretty good on AI, not entirely. We've seen reports that it's not, adopting it as quickly as it should, but perhaps, you're going to be a part of that in the next 5 years of people really getting into it and getting onto your platform. If if AI does start to take off in commercial real estate 5 years from now, what does the market look like?
Yes, I mean, in some sense, you can see the trend already, and you just need to amplify it. So what's the trend, right? Unfortunately, technology is causing income inequality. So that basically means you want to be investing where wealthy people, that's suburban enclaves, just basically wealthy people are going to have more money, they're price insensitive, so that's one area of opportunity. The challenge is that affordability is going to have this uneven impact, as we've already seen. So you want to avoid where there's going to be, I think, a strong policy response. You're already seeing that with Mamdani in New York. So I think you have to be careful of investing in places where they're likely to try to bring in new policies to even the playing field. So that's like, I think blue cities are going to be a high risk. But if you're in the suburbs, and you're focused on wealth, this has not been my focus. Over the years, I've always had focused on middle class affordability. But technology is now going to make that much harder to make money in real estate.
And why specifically, though?
Why? Because I believe that AI is going to create tens of millions of artificial workers. And then what's going to happen is that the workforce is going to be a shock to the workforce, an impact to the workforce. And mostly the front office is going to gain from it. And the back office and the middle office, the accountant,
they'll cease to exist.
They won't cease to exist. I think people are thinking of it too much like the Terminator. You think of it as a co-pilot. I mean, Fundrise is adopted across the entire business. Every time we adopt it, the people who adopt it in the company, maybe 10 people inside our customer service department, are way more effective, where you don't need as many people. So the people who stay.
So how many jobs are you shedding when you launch Real AI?
I think that we will see tens of millions of jobs suppressed.
What about Fundrise?
Fundrise, yeah, we've been in. I mean, we haven't had to hire since we launched AI. We've rolled it out, customer service, financial analysis, product development, IT, everywhere. Every single time we need less people, and the people who are on the team are more effective and get paid more.
Are you firing people?
I wouldn't say firing, I say we stopped hiring. We hired 150 people a year at one point, and now we haven't hired somebody since we rolled AI out.
Interesting. So besides AI, just because I want to get your general impression of the market, I know we're AI-focused AI, but moving away from AI for a second, where is that great play? Where is the opportunity in commercial real estate that we're not seeing right now? Because that's what we're all about.
Yeah, okay, well, so a second order effect of AI is...
I said no more AI.
I know, is deflation. When you end up with tons of competition from technology, the cost of service jobs are going to come down, and we're going to see inflation, huge disinflationary forces. And so that kind of disinflationary force is a mega trend, and it's going to lower interest rates. And people in real estate don't seem to see it coming, but it's if you think about the internet, right? Ultimately, the internet, it affected e-commerce the way you would have thought, right? Essentially, it displaced in-person retail with home delivery. AI fundamentally displaces cognitive labor, so that's going to lower the cost of wages and bring down interest rates. And that shocked interest rates combined with, I think, Trump's desire to lower interest rates, I think those will combine. I wouldn't be surprised that Fed funds rates 1%.
1%.
In 24 months. It's that kind of like explosion in explosion in real estate asset prices as a result of this combined political and AI deflationary shock is going to, the real estate industry will rip.
And where do I play that? Just everywhere, or is there a specific spot? Because we know the president doesn't like single-family rental investment. That's
true. I mean, it's the way you make money in real estate is by riding a mega trend. You want to be on a trend like, industrial, data centers. So I think you want to avoid Class B office, right? Because AI is going to eliminate jobs. You don't want to be there. You probably don't want to be in workforce housing because that's going to be under a lot of pressure. So you want to be in high-end retail, high-end residential, high-end office. Anything high-end, I think we'll see huge benefits, and also interest rates will fall.
So high-end, which seems a little bit ironic since you want to democratize investing.
Yeah, no, I mean, it's not the trend I want, but it's definitely a trend I see.
Ben Miller, Fundrise CEO, thanks so much for joining us.
Thanks for having me.